If you look at the driving range, it will be installed with NCM 811 technology, and as a result, we're probably looking for a driving range of around 550 kilometers. That compares with Tesla's Model 3's 430 and VW's ID.4's 487. So certainly leading the pack in terms of driving range. And also, as you highlighted earlier on, they do have a bit of a shorter charging time versus the likes of Tesla Model 3 and VW2 because the charging time is roughly about 18 minutes in up to about 80%, thanks to their multi-charging system of an inverter. So it's also going to be superior compared to the likes of Tesla Model 3 and VW's ID.4, if you like.
So how does this eGMP, its own EV-only platform, stack up against some of the other EV competitors? And how does that play out for the re-rating possibility for this particular stock?
Right. So Hyundai is going to be like the second mass market brand among global automakers, which will have an exclusive platform. Of course, we had VW's MEB platform, which was rolled out, I think, last year. There was some software glitches, the launch was a bit delayed. I think going forward, if you look at global electric vehicle demand, last year was about 2.2 million units, and I think from here onwards, for the market to see strong growth, I think the mass market brands will probably step up a bit, and I think. Basically, this will be a re-rating factor because last year, out of Hyundai's share price appreciation of roughly about 60%, I think 35% came from multiple expansion. Year to date, I mean, the stock's up by 25%. And what's interesting here is, despite the fact that in early February, the company disclosed that they're not in talks with Apple for autonomous EV, the stock hasn't really corrected at all. So I think going forward, once the Ioniq 5 is launched from late March in Europe, followed by May in Korea and US for the second half, I think this would provide, if you like, more impetus for its share price outlook going forward.